the General Ledger Controls Masterclass, and we've got a lot to cover today. We're probably going to take up the full hour. There's almost 60 slides, so we'll jump straight into it and get underway. So in terms of what we're covering, we'll have a little bit of an intro and disclaimer, talk about security in terms of users and roles, and how that crosses over into the financial period permissions, and then get into your general ledger defaults and settings, have a little bit of a look at subsidiary ledger controls where they sort of cross over into that finance function, talk a little bit about corrections, have a look at some of the more recent additions that help us with our controls within the software, talk about automatic postings and some concepts around that, and then there's, I guess, a fairly heavy section where we have a look at the different posting options that are now available within the system now that they've sort of reached maturity. So we are going to sort of bounce around a little bit. So we'll talk about something early on in the piece perhaps, and then we'll go into a bit more detail later on. And it's one of those where we'll, there'll be little references going back and forth throughout the session. And one improvement that we've made to our masterclasses based on feedback is, we're going to have a little quiz for you. So those who are nerdy like me and like to test their knowledge, there will be a quiz. We'll have a link for that. That will follow with the follow-up communication either later on today or early next week. So it's a 20-question multiple choice quiz, and there's no penalties if you get anything wrong. It just tests your knowledge as we go. Now we're going to have a little bit of a mixed bag of audience today, where there's some people who are on top of most of this stuff already, some people who are probably been avoiding this topic, and now they need to really focus on it to improve what they do in their organisation. But I'm pretty sure for everyone, even those that do have fairly mature controls in place within their systems, they'll be learning something new today. I guarantee that no one will know everything that we're covering. And just as always, we're software developers, we're not accounting advice givers. So we are going to be discussing some concepts fairly broadly and fairly generally. We don't know your specific situations, so you can't turn around and say, oh, Sybiz said this in the webinar, therefore we're doing it, and it's all Sybiz's fault. We don't know your situation. We're just giving you some information that you can take away, bounce off your professional advisors and your business partners, etc. And if you need to implement some of these things in the software, you can choose to do so. We can't make that decision for you, but we can give you some information. So we are going to be looking at the software in the context of version 25.10, which has just been released. And so if you see some things in the screens that we show you that you don't have in your version, it's probably because you're on an earlier version. We'll try and point out when some of these things came in to the software. So just bear that in mind. We are going to be talking a lot about automatic postings. We are using account names that kind of mimic the settings within the groups and locations that those posting accounts belong to. So they're a little bit contrived, but it just helps us sort of map that flow as we go through transaction processing later in the session. And for our international guests, just a couple of little primers there. We may be talking about general ledger, which you may refer to as the nominal ledger. There are a couple examples where GST is posted to the general ledger or nominal ledger, but you can take GST to mean VAT. And where currencies are used, it's the Australian dollar with the dollar symbol. So apologies for those that have to do a little bit more thinking when we run that through this process. So just by way of introduction, unlike some other systems, we sort of pride ourselves on Sybiz Vision being a robust system that we really value the integrity of the data and the auditability of transactions. So it's amazing how many times we get someone's external accountant ring us up and say, oh, how do we delete these transactions? It's like, you're an accountant, you shouldn't be deleting transactions. And in some senses, it's highly illegal, especially in the point of sale environments. And also the integrity sort of enforces that once a transaction has been posted, you can't edit the financial details of that. You must make transactions to do those corrections, and that way you've got the audit trail and hopefully you learn from your mistakes and put some better processes in place to reduce the likelihood of the same thing happening again. So just in general, when I got taught accounting, and again, this is just not advice, but my process. If I make a mistake, and believe me, I do more often than not, is I reverse the transaction that I've made the mistake on in full, and then reprocess it as intended. So that's just what I got taught when I went through university, etc. And as I said, hopefully you're already on top of a lot of what we'll be covering today, but I'm sure everyone is going to be learning something new. And for those of you, it may just sort of be giving you a bit of positive reinforcement that you're on the right track. And others, as I said, some of this will be very new to you, and you want to improve what you do in your own internal systems. And so, yeah, just to emphasize, we're not looking at controls in a broader sense within an organization. This isn't an auditing 101 session or anything like that. It's looking at the controls that are available to you within the Sybiz Vision system. And yeah, so we're not covering your enterprise-wide considerations like data backup, cybersecurity, and specific internal controls. Backups and things like that, and your cybersecurity should be something that you're looking elsewhere to get that advice and checks and balances in place. Okay, there's no specific order to what we're doing, but we're trying to sort of yeah, follow some sort of process where things do need to flow into other topics. We cover them first. So, but in a lot of senses, this session today is in no particular order. So we just start with a little bit on the users and roles, and this is just very high level. It is quite extraordinary when our business partners go and visit sites, or we go have a session with a customer. A lot of the users and roles are fairly lax, people being given permissions that they shouldn't be given. And so just a little bit about that, just to help you review your own process. So roles are allocated to users. So you really take a role-centric view rather than a user-centric view. And so you set up your roles and then you allocate those roles to users. So one user can belong to many roles, or many roles can be given to a single user. The rights, sorry about the non-pluralization there, the rights are accumulative. So that means that if someone does have multiple roles assigned to them, and say role A gives them permission to process sales invoices, but role B doesn't give them that permission, then they will have the permission to process sales invoices because it is conveyed in one of the roles to which they've been assigned. And you can temporarily assign a role and remove it. So if you were getting some people to say get involved in helping you process stock take, but they ordinarily don't have anything to do with that function within the business, then you can set up a stock take role for them, and your admin people can get involved in processing the stock take and helping you out at that busy time of year. And once the stock take's finished, you can revoke that role from that person, and they can go on as they were previously. So users and roles can be made inactive, and yeah, so there's a lot of flexibility there. And just a little bit of guidance here is to take an additive approach when creating roles. So have a bit of a think about it. What does someone doing this role need? Convey those permissions. Take a minimalist approach, because you can always add permissions. So if in doubt, don't convey that permission straight off the bat. Wait for that need to arise, if indeed it does, and then you could add those permissions to the roles, or even create new roles to convey those permissions. So so yeah, even if you have one person within a team that has one more permission than everyone else within their team, create a new role and assign that to that particular user. So as we all know, Sybiz Vision is constantly evolving. We're always adding new functionality, and the approach that we take is if we add something new, we don't allow that permission out of the box. You will then need to go and work out who within your organization, or rather which roles you want to apply that new permission to. There are some exceptions to that rule. So if we make permissions more granular, which we have done from time to time as well, what we tend to do is say, okay, well, if the high level permission that was granted previously has been to permit someone to do something, then as that high level permission is split into many permissions, we will either enable it or disable it based on what is currently set within that role. The reason for that is that we don't want to have a user experience where you've been going along nicely, always being able to do a particular function within the software. You put an upgrade on and bang, all of a sudden the computer says, no, you can't do that function. So that's why we take that approach there. And yeah, another thing just to point out as well is if you have an individual within the organization that performs different roles at different times, or maybe you know, they work on different sites and have different roles on different sites, you can set up multiple user accounts for that person, and it doesn't affect your user license count. So so if that one person is only logged in as one user at any point in time, that's only going to take up one user license, even though they may have 3 different user accounts that they could log into depending on where they are or what they're doing at any point in time. So that's just something to point out there. And just a little bit of a tip as well, it is recommended to create a separate user login for your business partner to use rather than them using, say, the administrator account. And that's just the best practice. The world's not going to stop spinning if you don't do that, but it's just a tip. We have recently added a couple of years ago some user password constraints as well, so you can set up your own password policies here. And yeah, we won't go into too much detail there. It's pretty self-explanatory and very similar to what you see in other systems, and certainly when you're setting up accounts on websites, etc., you probably go through something very similar as well, where it'll tell you you can't use that password because it's too simple. So you've got the control to set up password constraints within your system. Just a note on that, when you do set up your password constraints, it doesn't cause issues for people straight away. Like if they're using the previous passwords, they can continue to do so unless you prompt them to change their password on the next login. So there's a good transitional design there as well. And just a little segue here for customizations in terms of things like custom reports and grids and things like that can be made sensitive to roles and even users. So that's pretty powerful, where if you do have, say, custom grids and you want certain people to see more detail than others, rather than creating 3 different flavors of the same grid, you can actually use the roles, etc., within the logic of the grid to display different information to different people. So that's pretty cool, and that extends through to the breakpoints functionality as well, and just some examples as to how breakpoints can be used to be sensitive to different things within the organization. You can have notifications of key data changes emailed to a manager. You can have SMS notifications now generated to notify people of things that have happened. You can prevent users from doing something stupid. So, you know, if they go to process an invoice for a bazillion dollars, you can prevent them from doing so. So an example there is sometimes people will get a barcode scanner and scan a barcode into a quantity field and just do things on autopilot and end up processing an outlandish transaction and get into a bit of strife there. And yeah, you can also have breakpoints that check things or do something upon logging into the system. So yeah, there's a lot of flexibility there, and again, they can be used as a broad part of the controls that you have within the organization. So another practical example there is some people will have like a policy that certain things can't be done, such as they may have key accounts that they're not allowed to sell if the credit terms have been excluded unless someone says it's okay to do. And so you could have a breakpoint sort of alerting the people within that chain of command that something's gone on, and it's convey that permission, etc. So pretty powerful stuff. And another thing that I really like in Sybiz Vision is we get to find out who, what, and when certain things have happened. So there's a couple of things that really help, and I use these very regularly internally is we have our changelog module. Now that's an optional module, and that pretty much does what it says on the box. It provides a log of changes that have been made to a range of objects within the system. So an example being customers or case files or products. So if you notice a change in behavior, it could be, okay, this customer's exceeded their trading terms, what the hell's going on? Or they've exceeded their credit limit. And then you go and have a look at the customer record, and all of a sudden the credit limit's a lot higher than what it was previously. You can then jump into the changelog and see, okay, who has made that change and when did they make it, and do your own internal investigations there as to what's gone on there. So pretty powerful module that. And it's not a separate module, it comes as part of the product, is the application log. And this provides a log of who was doing what and when. So it's also pretty handy, but it doesn't go into the specifics. So it'll tell you that Ed may have edited a customer on Tuesday and let you know who that customer is, but it won't tell you what Ed did. That's where the changelog comes in. So it will still help you if things have been going along nicely and then all of a sudden the system's behaving differently due to someone making a change. The application log's a powerful destination as well to help you work out who has done something. So as I said, it's not detailed, but it is still quite handy as well. So just a little bit of a look of the change log and the application log. So the change log sort of displays a bit of a grid as to what's changed. It will be color coded differently depending on who has done what. So if an external change is made, so if someone's gone into the database directly and made a change, then that will be highlighted in red. If they've made the changes in the object itself, so here this is relating to a product. So here I've edited some pricing, I've changed the description, so that's just with a white background. If I've imported information into the system, that will be reflected with that little blue color, and changes made via the mass update will be reflected via the green color. So that's the change log, and you can specify a date range, etc., to improve the performance. So if you're looking at say a customer record that's had lots and lots of changes over many years, and you open up the date range on that, it's obviously going to be a bit slower than if you were just showing what's changed in the last month. And the application log, this is a little bit different, and it just shows high level information, but still gives you some information. So it'll let you know the specific purchase requisition numbers that have been edited. There is also a recent change that records failed logins to the system. So previously, if someone had forgotten their password or something, or if you had someone just maybe someone's left their PC unlocked and someone's gone, okay, I'm just going to try and get in with this username and password combination, that's also now logged in the application log. So again, a powerful tool there that'll help you find out why the system's changed its behavior. So yeah, just a very quick jump into the financial periods. So you have up to 5 active financial years, and what that means is you're allowed to control whether those 5 years or the periods within those 5 years can be transacted into. So that doesn't mean that you can only have 5 years worth of periods within the system. From a reporting perspective, you can go back for the entire life of the database. So you could have 20 years of data within your database, but you can only transact within the periods of the last 5 years, but that's entirely based on the permissions that you've set. Yeah, hopefully that makes sense. And just a little screen grab there just to show that you can also control access to who can perform transactions in periods based on their role as well. So there's a lot of power there. So you might have a situation where you're in your new financial year and you've got your finance team that you're happy to have them still working in the previous financial year, but you don't want your accounts payable and accounts receivable doing anything in the old financial year. So you've got that control at your fingertips. So that's yeah, just handy control there as well. And we will be looking at this in more detail later, but this is a relatively recent change in terms of setting up your posting method default in the general ledger defaults, and we'll, as I said, talk more about this later. So that came out in version 25, and what this does is just simplifies the user interface when you go to set up your posting accounts in things like groups and locations. And just in terms of your general ledger accounts or nominal ledger accounts, you do have the ability to set up the options as to what types of transactions can hit those accounts. So when it comes to your control accounts or your automatic posting accounts, we recommend that you set them up to allow automatic postings only. Now you might say, okay, well, on occasion we need to make adjustments, then temporarily come in, flick on allow journals, do what you need to do, then come back into the account, turn the allow journals off, and that will keep things a lot more controlled than if you allow all and sundry transactions to be performed against those general ledger control accounts. Just a couple segues also to subsidiary ledger controls as they sort of interact with your general or nominal ledger controls. So we have recently added additional security around bank account details for customers and suppliers. So there's more fine-grained control as to the customer and supplier bank details now. So that's obviously a hot button topic around the world where it is, yeah, I guess a lot of fraud these days is internally generated, where we see stories every week of people getting busted, changing bank account details and having things being paid to their own bank accounts. So by tightening the controls on that, you can restrict who can do that within your organization. Yeah, similarly, we have credit controls on customers, so that can limit the risk to the business by having things like credit limits and trading terms. There's also the separation of processing rights. So if you've got a lot of mundane transactions that need processing, you could have someone fairly junior in the organization key those transactions into the system, and then someone more senior can come along, open those transactions up, check them, and then process them. So that's also pretty handy. There's also the ability to hold invoices. That's been in the software since day dot. So from a creditor's perspective, where you can say, okay, when a new invoice is processed, you can actually set up on a supplier by supplier basis whether you want the entry of new invoices to automatically go into a holding pattern. So that means that someone needs to review and release those invoices before they can actually be paid. You can also do that on an ad hoc basis, so you can go in and hold an invoice while something is being disputed, and then release it once that dispute is resolved. We have also added that similar functionality now on the customer side of the fence, and so that works very similarly, where if a customer is disputing an invoice, then you can also manage that very similarly as you can to supply invoices. So there's help topic information on that. So if you're not familiar with it, you can have a look at the help file as to how to use those things. And another big thing that comes into your both inventory and supplier ledgers is supplier special prices. So one thing we encounter quite often with customers is they can come a cropper to stale costs within the system. So when you do a new purchase order, that the system will use its best efforts to suggest what price or what cost the purchase should occur at, but it only knows what it knows. So you can get into a situation where you may not have purchased that item for 3 years, and we've seen inflation across the globe. So chances are that thing's going to cost you more than it did 3 years ago, but the system's going to use something like the last cost or the last known purchase for that supplier, unless you have your supplier special prices. And probably a better way of thinking of the supplier special prices is supplier price lists. So if you can get your supplier price lists, then you can import them into the system and use that as a more accurate price or cost for any new purchases. And just finally, because we have had quite a bit of interaction with customers on this point recently, I'm just going to labour on it a bit more. So think of this scenario where you have a purchase delivery that occurs, that's processed into the system. So your people out the back in the store have done their job. They're not particularly concerned with how much it costs. They probably don't even have that information on the delivery docket that they're using to basically process the inward good delivery. And then your salespeople see that widget's arrived in the warehouse and they're keen to sell it, so they go and sell it to a customer. And then 2 days later, the purchase invoice arrives, and that's when you know the true cost of that item. But unfortunately, you've already sold it, so you've already incurred a sale at less than the actual cost. So the horse is already bolted. You can't go back to the customer and ask them to pay you the difference, or you can, but chances are they won't pay you. So the idea is if you can import the supplier special prices or the supplier prices into your system, then that will help protect you from that particular scenario where you sell something for less than you intend to because your costs aren't up to date within your system. So hopefully that makes sense, and it is recommended to use that, particularly if you have been subject to quite a bit of inflation. Transaction corrections are also something that exists within the system, and they also cause a little bit of confusion. And again, in the introduction, I said we pride ourselves on the integrity of our system, and that's something that won't change. But you might scratch your head and think, okay, well, if you do, then how come you've got this transaction correction facility? And that is purely because you can change non-financial information. And if financial data needs changing, then you have to do that transactionally. And just where the corrections do cause a little bit of confusion is underneath the hood, we have transaction-specific database tables. So we've got a sales invoice and sales invoice line table. And so when you do a correction on a sales invoice, it's those tables that are interacted with. And then we have our posting tables. So that's where the financial aspects of those transactions hit. So we've got our post GL for general ledger or / nominal ledger, and our post IC for the inventory control ledger. So when you do a correction, those posting tables are not touched at all because that's the transaction level detail that's been posted to the ledgers. So you can get a situation where you go and look in one part of the software and see the results of that correction. But if you go and look at the transaction history, for example, you'll see that that hasn't been updated. So hopefully that makes sense and allays any confusion that you may have had as to the way those corrections perform. So just a little bit of a dump of some of the things that have been added recently. So if you are on an older version, these are some of the things that you may be missing out on. So we have increased the active financial years from 3 to 5. As I said, we will have a little bit of repetition as we go through this. We have talked about that previously. We also have the general ledger consolidation companies. So that allows you to consolidate at a general ledger level companies within your group, even if they are in different jurisdictions with different base currencies and different financial years. You can still consolidate. That's exactly the experience that we have here in Sybiz. So we can consolidate our companies with multiple currencies and different financial years. So that's a pretty cool recent addition as well. We, with the users and the roles, we have also now got the ability to see who has been allocated to each role. So when you go to edit roles, there's a users tab now, and you're able to see which users have been assigned to that role. And the flip side of that, when you go and have a look at a user, you can see which roles have been allocated to that user, which was pretty much there previously, but now you've got both angles of that information. Password policy settings, we've had a look at those. We also have the ability now to log in via Windows authentication. So if you are using domains within your organization and people are basically having their own PCs and they lock them when they go to the bathroom, then Windows authentication will save you having to log in with your Sybiz Vision username and password. So that's pretty cool. And that can be interchangeable, so you can have a bit of a try with it. If it doesn't suit you, you can revert back, and that's on a per user basis as well. And there's been some additional security added to the custom reports and custom layouts, so you can sort of control who has access to those things. There's also, as we saw, the separation of security for customer and supplier, not just banking details, but you can decide almost on a tab by tab basis who is able to do what, or which roles have permissions to certain elements within those customer and supplier accounts. The accrual posting extensions, which is going to be the big end finale to this session today. There's the job group override, which is a subset of or an extension to those accrual postings. The default posting settings, we had a brief look at that previously. Disputed invoices we've talked about on the customer side of things that's been added. We have streamlined the UI for groups and locations based on that posting default. In 25.10, very new, we've added the notion of stores posting, so we'll talk about that a little bit later as well. We've seen the failed login attempts in the application log, and in version 26 we are going to be getting finer grain control over the types of transactions that general ledger accounts can allow. So we've got 6 permissions currently, that's extending to 8, I believe, so that'll be coming in version 26. So it's been quite a lot happening around helping you with your controls. And just in a general sense, the key financial reports in the system, and these are pretty much from a general ledger, these are the only reports we run, with one exception which we'll cover in the next slide. So you got your trial balance, that should never be out of balance. There's controls in place to prevent that from occurring. On a very, very rare occasion, you may get a message saying, oops, something has gone wrong. That a transaction is trying to post out of balance, and the system will prevent that from occurring. And there's 3 or 4 cases that I know of over the life of Sybiz Vision that has occurred. So it's a very, very, very rare thing, but it can occur. And of course, you've got your profit and loss and balance sheet as well. There's also the comparative profit and loss. I actually prefer that to the bog standard profit and loss, depending on whether I'm wanting to compare budget or not. And you have the ability to restate those financial reports in other currencies. So if you have like a parent company and they're all about the US dollar, you can actually choose the currency that you want to state your financial reports in as you run them, and run them in those flavors as well. So that's pretty cool. You can also run a profit and loss report that basically breaches the financial year. So if you wanted to have and apologies again to those that a financial year is a calendar year in your jurisdiction, but in Australia we have a 30th of June end of financial year. But if we wanted to see how we're tracking on a calendar year, we can run a profit and loss from January to December, and it will display as if we did have a financial year of January to December. We can even have a look at a profit and loss for the last 3 years, so all in one hit. So that's pretty cool as well. And report sets, we'll talk about them a little bit more. We're not going to have a deep dive into them, but if you're not using report sets, yeah, let that be one of the key takeaways from this session. The big report I wanted to talk about, and again, it surprises me how many people aren't using this report. This is the report, and It's the ledger reconciliation report, and essentially what it is exactly what it says. So you've got your subsidiary ledgers in Sybiz Vision, and they post through to the control accounts that hit your balance sheet. And the ledger reconciliation report helps you check to make sure that everything remains as it should, that the subsidiary ledgers balance to their general ledger or nominal ledger control accounts. So in terms of how to use it, it's just a matter of running it and having a look at it. We will look at a worked example of what you need to do if you do see an issue. In terms of when to use it, absolutely add it to your monthly report set. But if you have a situation where it's going out regularly, you want to know why that's the case. So you're going to be using it regularly. And in some cases where it's a real head scratcher as to what's going on, we will tell customers, run it on a daily basis to see if there's any movement in that variation. Because obviously if you're only looking at what's happened during a day and it's gone out, it's going to be a lot easier to find out what's gone wrong compared to, let's say you've never run this report before and you've got 5 years of data in your system. Obviously it's going to be a lot harder to find out what's gone on if you're looking at 5 years of data. So the other big thing to point out about this report is it is a life of database report. So you're not running it as at a point in time. It's so if you say, as we are now, we're in the middle of August. If you were still finishing off the end of last financial year, if you ran the reconciliation report, even though your system date is the 30th of June 25, apologies to our internationals again, the reconciliation report is going to be including all transactions up until the 15th of August. The main reason for that is if it was going to be undoing all of the offsets and everything that's happened since the 30th of June or the 31st of December, that would take a month of Sundays. There's a lot of heavy lifting involved and you'd get frustrated waiting for that report to run. It already does a lot of heavy lifting. But yeah, if it was excruciatingly slow, it would discourage you from using it. And so that's why it is a life of database. The other benefit to it being life of database is that if you do have a situation where you're, say, comparing an age balance list report to your trade creditors or trade debtors balance in your balance sheet and it's out of balance, first thing you do, run the ledger reconciliation report. If that balances, then you know you've got a timing issue, not a catastrophic issue. So that's pretty cool as well. So yeah, if it's out, monitor it. So if it's not obvious what's gone on, run the report the next day and keep running it. See if there's any movement in the imbalance. Because if there is, that gives you the ability to try and work out what's going on sooner rather than later. Compare the trial balance report to the relevant subsidiary summary report. Now that can be done as at a particular point in time, so that helps you to see, okay, well, if things balance at the end of financial year and we're now a month and a half into the new financial year and things don't balance, then we've got some points in time we can go to the end of the previous month and see if it balances. And if it does, then that means we've only got to worry about the month, the current month that we're in. So some of the common reasons this report can be out: if you've changed your posting accounts but you haven't journaled the balances across, then the report's going to be out. If you do a direct journal to a control account for no particular reason, then your reconciliation report's going to be out. If you do some silly things in terms of timing of transactions, your report's going to be out. We'll have a look at an example of that. And if it's out by a couple cents, who cares? It's immaterial. You can get that occurring, especially with foreign currencies and rounding. It might be 1 or 2 cents out or 1 or 2 pence. Who cares? That's not material. But you know, if you're really wanting to balance it to the cent, then you can remedy that. So yeah, so basically when you go to run the report, you can run it for all of the ledgers within the system as they flow through to control accounts. One of the beauties of the report sets, for example, is you could include the reconciliation report, ledger reconciliation report in different flavors. So you could have just a debtors creditors version, and then you could have an inventory version, and then you could have your other ledgers if they're relevant. So different people could be interested in those aspects of the reconciliation report depending on their role in the organisation. But if you want to do a holus bolus one, you can tick on all of those options and the report will run. This is just a snapshot of a report, and here we have a case where our trade debtors doesn't balance to our control account, so it lets us know how much it's out by. So this is a bad thing. We never want to see this. So this gives us something that we need to investigate now. So we'll have a look at that process. So hopefully you can see down the bottom of the screen there, out of balance by $7,000 and a bit. You can see these two totals don't agree, whereas up above those totals agree. So we know it's not a something that's permeating through absolutely everywhere. We know it's just a fairly localized issue that we have here, and so now we need to investigate it. So in terms of analysing those imbalances, what we would do is, so that example is we have our foreign trade debtors doesn't balance with the control account. So we'd go and run the age balance list just for those groups. So I'll just hop back there. You'll see the group numbers here are listed, and so I'd only run my age balance report for those 6 groups, not all my other debtors groups, because then it makes it a bit harder. And then I'd compare it to the control account, and I would run that report at different points in time. So I might go back to the start of or the end of the previous financial year and check to see where they imbalance then, and then go back to the end of the previous month, run the trial balance and the age balance list report, where they imbalance then, yes or no, and then I know kind of what time frame I'm looking to try and find out what's going on there. I'll then review the postings to the general ledger account that aren't listed as automatic postings. I might even go to the application log and see, okay, has anyone edited my my groups and changed any posting accounts? I won't be able to see if posting accounts have been changed, but at least I'll be able to see someone has edited one of those debtor groups at some point in time and changed the control account without journaling across. Once you discover what the correction is that is required, go and do a journal, and then what I'd recommend there is, this is a good time, once you know things are all in balance, is go to those general ledger control accounts. You can use the export import function for this as well, and just reduce what can be transacted to automatic postings only for those accounts. And yeah, as I said, if it's not as simple and clean cut as that, where it's not just a case of someone's done a journal to that control account that they shouldn't have done, then yeah, just monitor on a regular basis, even daily, to see if it is moving, and that will help you zero in on what's going on there. Okay, so in terms of the reconciliation report, if you wanted to sort of get the equivalent information as at a particular point in time, then you will need to run individual reports for the various ledgers. So obviously your trial balance is going to show you, as with the balance sheet, the balance of those control accounts, and then you can run your age balance list for your debtors and creditors as at that same date. Similarly, from an inventory perspective, your quantity and value report is the equivalent that will show you the balance compared to your trial balance. And you have the job and service summary reports and the depreciation schedule report for your fixed assets. So if you were to do an investigation based on an imbalance in your fixed assets in the reconciliation report, then you'd be comparing the trial balance to the depreciation schedule. And yeah, just to sort of round it out, the ledger reconciliation, if you have a situation where the ledger reconciliation report balances but the trial balance doesn't match your subsidiary ledger reports, then it's most likely a timing issue. So if you run the individual reports at the end of the current month, then that will also help that investigation. And so a scenario, this happens from time to time, where an offset is dated prior to one of the transactions that it's being offset. So that could be a job cost in the new month is being consumed by a job invoice in the old month. So that happens typically where a job is coming to the end and you're doing your end of month invoicing on, say, the 7th day of the new month, but a minor cost has crept in from a supplier dated the 4th of the new month. You can't be bothered waiting till the end of the next month to do the final invoice for that job. So you're going to sweep up that job cost from the 4th of August into your 31st of July invoice. And yeah, then you're going to get a situation where your job summary report's not going to equal your work in progress in your general ledger, but your reconciliation report is going to balance. And so that's a reason. Similarly, from an invoice perspective, if you raise an invoice on the 3rd of September and you have a receipt on the 29th of August, and then you go to do an offset that's dated the 29th of August, i.e. that offset's being done against an invoice that didn't exist at that point in time, then you are going to get a situation where your age balance list isn't going to equal your trade debtors control account. So, but again, run the reconciliation report. If that balances, then you know you've just got a timing issue. Report sets, as I said, if you're not using them, you should. They're easy to configure. I'm not going to go into any detail here. There's the beauty of the report sets is you can have a bit of a play with them, set one up, have a bit of a tweak, see what happens if you use different settings. You're not going to stop the world from spinning. And so you can have a bit of a trial and error with them. There's information in the help file as well, but from a concept as to what they are, is it just saves you having to run individual reports individually. You can develop quite a caffeine addiction if you run off and get a coffee each time you hit a report. So instead, use report sets which generate a single PDF with all of the reports in them. You can also schedule those report sets to run automatically if you so wish via breakpoints. And yeah, just an example monthly report set, you might want to include your trial balance, balance sheet, profit and loss, comparative profit and loss, age balance list, quantity and value report, depreciation schedule, job summary, service summary, depending on what parts of the software that you're using. And the same report can be added multiple times to the report set with different flavors. So that's also quite cool as well. And if you are using Sybiz VisiPay has report sets as well, and you should be using them there if you're not. Okie dokie, now into the automatic postings, and this is obviously the main part of control within the system from a general ledger perspective as they relate to the subsidiary ledgers. So yeah, essentially, as we've said a few times, restrict which transactions are able to hit those general ledger control accounts. So lock those control accounts down to allow automatic postings only. You can toggle that on and off, so it's not like it's set forever. If you say only allow automatic postings, if you do need to make a journal, flick it on temporarily, do your journal, flick it off, yeah, so that's quite important. And yeah, a legitimate example is if you are changing your posting accounts, you will need to journal the balance from the old posting account to the new posting account. So you will need to permit journals to occur for that. So that doesn't happen automatically. I should just stress that. And yeah, if you're changing from periodic to accrual, which is a big focus of what we're about to cover, then yeah, you'll need to seek the guidance from your accountants. You may need to update your accounting policies, and you're going to have to figure out what the journals are that are required to make that change. So we do also have a new posting details report if you are going to be making the change from periodic to accrual. There is a report that helps you make sure that you've got all your posting accounts set up. We'll take a bit more of a look at that. Okie dokie. So this change did come out in version 25, where you can set your system up so that the user interface is less cluttered depending on the type of postings that you're wanting to do. So out of the box, we set it to undefined for databases that already exist upon upgrade to version 25. But when you create a new company, you've got the ability to set this straight off the bat and have a nice streamlined user interface based on your choice of automatic posting behavior. So undefined basically means we don't know what you're using at the moment, and periodic means that you just want to lock it down to say, okay, well, I'm happy with periodic postings, and so I only want to see the control accounts when I set up my groups that, or my locations that relate to that posting methodology. Similarly, if you do change to accrual, which is also known as matching or perpetual from an inventory perspective, then yeah, essentially you make that change and the UI will flow. So yeah, just I guess I'm not going to go into too much detail at this point, but yeah, with periodic, you get stuff happening in the profit and loss as you transact, whereas accrual, basically nothing happens in the P&L until the sale occurs. So we'll work through a comparative example at the end of this session. And yeah, so basically this selection here just streamlines the user interface. You still need to go and set up your posting accounts. Now, some people may already be all set up with their accrual accounts. So I'm just going to do a little bit out of sequence here. We're just going to talk a little bit about stores, which is something that's just been added to version 25.10. So if you've learned nothing today so far because you've already on top of everything we've covered, then chances are this is new information for you, so you will be learning something new. So stores are relevant only if you're using inventory postings by location, and it suits a scenario where someone in location A can sell products from location B, and you want to actually chalk those sales from a general ledger perspective up to location A rather than location B, where the stock's actually coming from. So it's a little bit confusing, but let's work through an example. And again, I appreciate this isn't relevant to everyone, so we're not going to go into too much detail here, but just an overview of how it works if you are interested in implementing this functionality. So the stores are configured in the lookups. So here I'm setting up a new store, which basically just allows me, if I normally sell inventory from the South store, but I do have the ability to sell it from other locations, and I want those sales to chalk up to my general ledger accounts, then I can configure that here by adding a new store in the lookups. So just a little bit of an example of what would happen without stores versus with stores. So using the example I had previously. So if I'm in the north location and I want to sell something from the south location, then normally what would happen is, yeah, actually, sorry, I've just described that example incorrectly on the slide. Sorry. Yeah, so basically what would happen is if I'm in the south location rather, and I sell something from the north location and I'm not using stores, those general ledger postings would still go through as if that sale occurred in the north store. So it's actually following where that inventory is actually moved from as to where it's posting in the general ledger. With stores, in that same scenario, if I'm in the south store and I'm selling something from the north store and I have a store in place, then it will flow and use my general ledger posting accounts as if that inventory was sold from the south store rather than the north store. So apologies for those descriptors being incorrect. We'll fix them up before we publish the slides. And another thing that has been added reasonably recently as well, I think it came out in version 24, and this is even more niche, so we're not going to go into too much detail here, but it's just the job cost override, accrual override. So this only really comes in handy where you're posting by groups and you have items, inventory items that can be sold as is or consumed in jobs, and you want the cost to flow from a jobs perspective rather than a product perspective when they are used from a job perspective. So essentially it's optional. So if you don't specify a cost of job override, you can leave that blank. You can right click and clear it if it's something that you don't want to use. What will essentially happen is when a posting occurs that would ordinarily use the cost of jobs in your product group, instead it will use the job cost override or the cost of job override. So Again, very, very niche, but just thought we'd mention that one. Okay, so if you are all set up with your automatic postings and you've changed to the accrual method and you're all sweet, then yeah, this is the final topic that we're going to have a bit more of a deeper dive into. So you can feel free to exit this session now. But if you do want to have a bit more of a look and perhaps consider changing your postings, then stick around. If you are leaving us, keep an eye out for the summary email, and we'll have a quiz there as well. And because this is a fairly meaty session, we don't have time for questions. Either put them in the quiz. There's a question 21 that allows you to ask questions, or hit us up via the web contact form. But again, going back to the disclaimer, we are not giving accounting advice, we're giving software advice. So don't ask us questions of an accounting nature, ask those of your external accountants. Okie doke, on with the show. So we've seen a bit of the setup in the previous slides. We've also talked about the stores and job cost overrides. So now let's have a look at the configuration and the postings. So when you're undefined, you get a bit of a mishmash of, it's asking you for posting accounts for all and sundry, all the combinations, depending on yeah, what combinations you use within the system. So this is just having a look at a location perspective. So products have more posting accounts than, say, debtors and creditors. So that's why we're picking on them. So if we do say, if we go to our defaults and say, yeah, we're using periodic, we get under the accounts tab, we get inventory purchases, sales, inventory on hand, blah, blah, blah. And on the, if we set ourselves up to be accrual, then we have the purchase variance, inventory sales, inventory on hand, and inventory transfer. So you'll note there's no closing inventory, there's no inventory purchases. That becomes a variance account. And you also see the tabs are different along the top there. So you have your delivered, not invoiced, which is like a subset of accrual that has been in play since the software came out. But if you want to use true accrual postings, there's a lot more accounts to set up. So that's just showing you how the UI will behave differently, just using the example of locations when you do specifically say that you're using periodic or accrual postings. So this is just a very high level of the difference. And again, we're not giving accounting advice. This is just an example. There are different ways to skin the cat in terms of periodic inventory as well, but this is just one example where typically you get a situation at a profit and loss level where you have your opening inventory, add your purchases, less your closing inventory equals your cost of sales. Whereas in perpetual or in the stock sense or accrual, which is an illustration of accrual, I should say, you're just going to get your cost of sales in the periodic. So that's just looking at the way the cost of sales behaves differently, which is the crux of the difference between the periodic and accrual bases that we have. So yeah, I guess the other thing just to reinforce there is that in the periodic, you're going to get postings happening in your P&L accounts as you go throughout the transactions, and whereas with the accrual basis, generally speaking, something is only going to happen in the P&L when the sale occurs. So the configuration, as I said, you have a posting details report. This is just like a little snapshot of it on the right hand side. So you can, it's got some pretty good filtering where you can sort of say, okay, I only want to see the accounts that are exceptions. So that means that you've gone through, you've set up everything that you need to think that you've set up. So you just run the report again, just say, show me the exceptions only, and it'll say, hey, hang on, you still need to specify accounts for this particular purpose. And it is sensitive also to the posting method that you've chosen. So you'll see up the top of my report here, it says posting method accrual. Yeah, if you do change methods, it's chances are that you will need new accounts, and not all accounts are required. So if you're not using manufacturing, for example, or even if you are using manufacturing, if you don't care about getting finer grain postings on your labour and overheads, don't set those accounts. Simple. Yeah, so that's just a little bit of an overview of that configuration. And now we're just going to have a look at the difference in the postings as well. So this is basically processing a purchase, delivery, and invoice in one. So I've just gone straight to the invoice and done the delivery. I'm purchasing inventory into my system for all 4 locations that I have. So you'll see there's a lot of accounts that are getting hit there, but none of those are profit and loss accounts. And so I'm just going to run through a sequence of transactions using the accrual postings and then compare them to the periodic. So again, the key takeaway here is that nothing's happening at the profit and loss level. And if I process a sales delivery, and again, this is accrual postings, I'm posting by location, I'll have a couple postings there, but they're both, again, balance sheets. So I've got my inventory on hand and my sales accrual. So that's essentially my goods delivered, not invoiced account. So I'm getting postings there. And again, nothing's happening at the profit and loss using the accrual method. And now I go and do the sales invoice for that previous delivery, and the profit and loss is hit for the first time in that transaction. So now I have a situation where I've purchased some stuff in, I've sold a little bit of that with a separate delivery and invoice, and that's what my profit and loss looks like. So I've done a sale for $2,000, cost of sale of $1,000, GP of $1,000, net profit of $1,000. So that's what's happened there. And yeah, just to sort of show you what would happen with stores there. So without stores, if I'm in the south location, but I'm selling some product from the north location, without stores, what would happen is it would hit my sales north account and cost of sales north account. But with stores, it would hit my sales south and cost of sales south. But you'll see it still come out from the goods delivered, not invoiced account for the north, because that's where the actual stock is living at that point in time. So my stock still gets reduced accordingly there. So that's just a little example to round that out. Now, from a postings point of view, from the periodic postings, now just for simplicity, I'm not using the delivered, not invoiced accounts in my periodic postings. So this is just pure periodic postings. So again, going through that same sequence of transactions, I'm purchasing, doing a purchase delivery invoice combined to bring in stock into all 4 of my locations. And you'll see that profit and loss accounts are hit. So I'm getting my purchases and closing inventory accounts are hit. So they kind of offset each other. So they balance to 0. So my gross profit at that point in time is still 0, all things being equal. And then there's a bunch of balance sheet accounts that are also hit as a result of that transaction as well. And yeah, just if we go and do that standalone, or sorry, not standalone, if we do that sales delivery without doing the invoice, we will see that we're starting to now get activity on the profit and loss side of things from a sales transaction. So our closing inventory has been reduced at that point in time. So even though I haven't sold anything, it's telling me that my gross profit is $1,000 loss at this point, which is, I guess, one of the reasons why people prefer the accrual method or matching method or perpetual method of handling inventory, is that we don't get that situation as we didn't actually show the equivalent profit and loss because there was no, if I went to run the profit and loss using the accrual method, it would tell me that there's nothing to report because nothing's actually hit the profit and loss under the accrual method. Whereas we can see quite clearly just with that purchase transaction, the purchase invoice delivery combined, and now the sales delivery, we haven't done the invoice at this point in time. We have had quite a bit of activity occurring in the profit and loss using the periodic method. So now if we process that sales invoice for that previous delivery, we will see that we now have sales that have hit the P&L, and we have basically the same totals now in our profit and loss, irrespective of the method that we've used. And so we'll just show that comparison. So going through that same sequence of transactions where we have purchased a bunch of stuff and then done a separate sales delivery and invoice, we have the same sales total, we have the same cost of sales total, and we have the same gross and net profit. So your outcome's the same irrespective of the method you use, but in terms of what hits your profit and loss, it's a lot cleaner. We're not advocating one method as better than the other. There's a whole lot of different decisions that need to come in to that process. That's not for us to guide you. What we're simply doing is showing you what can be done, and it's up to you to discuss with your advisors as to which way you want to go. Okay, so apologies, we have gone slightly over the hour, and as I said at the start, due to the length of the session, we won't take any questions live. We have reviewed the questions that came in throughout the registration process, and we have actually covered off those bits anyway in what we've covered. So if you have asked a question, we may not have specifically pointed out your question as we've gone along, but we've certainly covered what you've asked during the registration process. As I said, you've got a quiz that's totally optional. I'm a real nerd, so I like doing quizzes. So if I was in your shoes, I'd be doing it just to sort of see how smart or otherwise that I am. And you also have an additional question within that quiz to ask your question. If you do have other questions that we haven't had a chance to answer, use the web contact form. But again, we are not giving you accounting advice. If you ask us a question that's accounting advice, we're going to tell you to ask your accountants. Even though I myself am a qualified accountant and probably know the answer, I'm not going to give you the answer. I'm going to tell you to go to your professional advisors. We don't want them giving you Sybiz Vision advice, so we respect them by not giving you accounting advice. So there you have it. Thank you very much for paying attention to this pretty heavy session. And you'll see just at the end there where we wrapped up, and we just had a look at a very narrow transaction set. We didn't touch job costing or service or fixed assets or anything like that. We just gave you an example of the difference of how the postings work differently through the periodic versus accrual. So we could have gone a lot deeper into the topic, but we just wanted to give you that overview and leave you to make decisions as to whether you want to continue doing what you're doing or change doing what you're doing. So hopefully that's given you food for thought and you've learned something. And with that, we'll leave you to the rest of your day. Thank you very much again, and we'll see you in the next one. Cheers.